Hi everybody, it's Red with RedDragonLeo.com, and this is June the 12th, Saturday, as I'm doing this video, this weekend update. Are there any bears out there left alive after the huge squeeze we had on Thursday and Friday? Well, I don't hear any. Yeah, that took me by surprise, folks, just like it probably took most of you by surprise as well. I really never thought that they were going to squeeze that hard. If you take a look here at the 5-minute chart of what happened, basically at this point right here, going down into this falling wedge, I really thought that we were going to continue down further. I thought that that was the start of the next leg down, and boy did they fool us all on that one. A normal falling wedge like this, it could break out at any point. You really don't know how far it's going to go down. If we look over at the 15-minute chart, you can see the same falling wedge right here. There's no way of knowing how far it's going to fall down. As you can look back up at this one, you can see when it fell down and fell down some more, and this would have been a normal breakout on a normal falling wedge without government interference or manipulation. There's no question they came in here and bought this up. This was all done by the PPT, the plunge protection team, to squeeze out the shorts. I don't think they got any money left to stop this market from crashing in the next 2 weeks. I think that it is clear to me that this was done only during the pre-market or aftermarket session, because that's the only light volume session that they could actually manipulate the market that high. Whereas all the people that seen this was a big huge MA pattern, and you could, the A, all it has to do is just stay below the top here of the M, so it could have fell from here and continued on down, which that's what I thought was going to happen, but it looks like they extended it on out to here. So these are very, very bearish patterns, and they are very accurate. When this falls, it's going to fall down quite a large amount, just like this, similar to this move down, or even further. I expect it to hit 1,000 at least by Tuesday. So anyway, when I said on the video I did Thursday that I thought it was going to fall down, it looked like it was. You look at the up move, and that would have been the A, and it would have continued on down. But the PPT came in there and squeezed everybody out and did a straight up vertical move during this pre-market session, and then as soon as it opened, everybody that went short in here had to cover, and during that covering process, you know, it just kept the market going up. I do not think this can continue now. The only way that the government succeeded in doing this was because this was a falling wedge. Now we have a rising wedge. This move here, if you draw a line from here, and then you can draw another line from this move up to here, it is a rising wedge. You can succeed in ramping it up in a falling wedge because that's a bullish pattern. You fall down, you jump out. But when you're rising up, you don't jump up, you fall down. That's just the way these patterns are. You can look up at Bowiski's Thomas Bowiski. I think I said it right. Probably didn't, but anyways, link is on my site here. And Thomas, you can look up those patterns, and he'll clearly show you what a bullish falling wedge is and a rising wedge. If I can find it here, Thomas Bolkowski. Sorry. So Thomas Bolkowski, he's the pattern site guy, and we'll show you all those different wedges or patterns if you want to look them up. But quite clearly, you know, these are called falling wedges and then rising wedges. So we have a big rising wedge right here, and the odds are probably 80 to 90% that it will fall to the downside. So you have to consider those odds, that it is very strong that Monday is going to gap down. Now, in the rare possibility that they come in and try to do another ramp job in the early pre-market session, this would be the best opportunity for any bear in the world to, as soon as it opens, within the first 15 to 30 minutes, get short, and because that thing, if it gaps up out of this wedge, it is just it would be the opportunity of a lifetime. Number one, gapping up out of a rising wedge, it has very, very, very low odds of succeeding and staying there without falling back down. And on top of that, it's got all kinds of resistance overhead. Look here, we have this 1100 area has been tagged 1, 2, 3, 4, almost 5 times. I mean, if it gaps up here and hits 1100, this is the shorting opportunity of a lifetime, because it's a rising wedge. Its odds are clearly against it making it. I think it's going to gap down. There's an 80 to 90% chance, in my opinion, it will gap down. But even if it gaps up, again, it's going to fall back down. That's just the way these patterns work. Look at a normal pattern, a falling wedge. Here was a normal falling wedge right here. And you can see when it opened on that day, it gapped, or it didn't gap, but it broke out of the wedge and went back up. And then it continued falling into another wedge and then went back up. And then did the same thing here. Here's, again, falling wedges. You see how these are normal patterns that you jump back out of the falling wedge. Well, what we should have done on this date was we should have jumped back up to about 1060, maybe 1065, in a pattern that looks similar to this or looks similar to this. Not a straight up vertical move. This was clearly government manipulation in the market to squeeze out the shorts, and they did that. There's probably not many shorts left that going into Monday. I'd say that you know, if they tried to gap this up, all the shorts are just going to pile on. You're not going to get the shorts to be squeezed at this point because there's just not that many left in there. I'm sure there's some, but most of them got annihilated right here. So for that reason, I think we are definitely going to fall back down here. I think we're going to hit this 1055 probably Monday and maybe Tuesday and close that gap. I think that's our first target, and I think that will continue down on down to an even lower point. I think we're going to go down to about 1,000 right off the bat by Tuesday. And look at it like this. This is the 60-minute chart. You can see the falling wedge, and a natural jump would have been just like this, about a 50% retracement again. And then here you have this, and this was like 110% or something, or 120. It actually went higher. It's just, they're just so rare. It's just unreal. So for Monday, if it gets lucky enough for a gap up, it will fail. It's got a 10 or 15% chance of succeeding. And then you throw in this overhead resistance. I definitely think that it will fail. So that'd be an opportunity of a lifetime. I actually think it's going to gap down and continue down Monday and Tuesday. And then after that, I think we might have a run back. I don't know how high, but if we break 1,000, we're going on down to probably about 965 to 970 range before I see it turning back up. And you can see the 60 is just dying. It's rolling over here. It's just, I mean, this is a long ways to stay above here. As you can see, they just don't last. This is a lot of time staying up above here. I think when it falls, it's going to be pretty severe. So after that, after we fall on Monday and Tuesday, as I expect, I think there's a possibility of a ramp up into Friday to close out options expiration week, and then after that, I do expect a large fall. So here, this is kind of what I'm looking for, down to about this range here, and then and that's it for this week, and we'll take the next week when we get there. Hopefully this makes sense. Thanks.